In this video, we'll be using cakes as an example to explain the concept of value investing. Investing in the stock market can often feel overwhelming, but by breaking it down into simpler terms, it becomes much easier to understand. Before making a complex business acquisition, it's always wise to start with something simple, like the 3 cakes in front of you. Although they may look appealing, it's important to understand what they are made of and their worth. 9 out of 10 people begin their cake shopping research by studying the composition and finding the best option. No one wants to buy a cake made from harmful ingredients, so it's crucial to find out the composition before making a purchase. The first step towards making an optimal decision to invest in the stock market is called fundamental analysis. This involves studying the composition of a business to determine its worth. A separate lesson will be dedicated solely to fundamental analysis, where we will delve into how to determine the composition of a business. To use the example of the cakes, the fundamental analysis would involve finding out what the cakes are made of. This information is crucial when making any investment decision, including in the stock market. I can answer which cake is made from what ingredients. The first one is made from sugar and margarine, the second one is made from butter and sugar, and the third one is made from farm cream and cane sugar. It's clear that the third cake is the favorite, while the first one is the obvious outsider. Now it's time to find out the cost of each cake. It's important to note that you should ask for the price after you have figured out its composition. This is similar to buying shares in the stock market. People buy shares because the price grows, but there is a risk of buying a harmful business if you don't know anything about its composition. Remember, first comes fundamental analysis, then comes the price. As a seller, I can tell you that the best cake costs $50, the middle quality cakes cost $10, and the low quality ones cost only 10 cents. The immediate choice here is complicated. Is it worth overpaying for a good product, or is it better to buy a low quality one at a lower price? At this point, you start evaluating the price-quality ratio to make the best choice. In the stock market, there are special indicators that help evaluate the price-quality ratio of businesses. We will have a separate lesson on how to evaluate a company's quality in the stock market. Even after knowing the price-quality ratio, it can still be difficult to make a decision for a good cake when the price is high and the temptation to buy a cheaper, lower-quality cake is strong. However, prices in the confectionery market can change daily and can be quite chaotic. You may find that the low-quality cake is now very expensive, while your favorite cake has fallen sharply in price and is now on sale. In this case, the choice becomes obvious. This is the essence of cost analysis, considering the cost and value of a product in the face of constantly changing prices. Your task is to get to know the composition of each cake and monitor their prices. If you find that the price does not match the quality, then this could be a great business opportunity to buy at a cheap price. By paying attention to these factors, you will be able to build a well-rounded portfolio of investments. Thank you for watching this video on value investing using cakes as an example. We hope it has helped you gain a better understanding of the fundamental principles of investing. If you like this video and want to learn more, make sure to subscribe to our channel. We will be continuing to provide simple educational materials to help you become a confident and successful investor. Remember, knowledge is power, and by continuing to educate yourself, you will be able to make smart investment decisions for a sweet financial future.